Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Wednesday, the 9th day of July 2014, and this is the daily report for gold and silver. Nice showing in the precious metals markets across the board, with gold currently trading up approximately $9 on the day. $13.28, $13.29, that's your bid. Ask is $1 above that, with a high of $13.32.70 and a low of $13.20.70 on the day. Silver also with a nice showing today, up about 0.5% on the day, or 11 cents. 21.11, that's our current print. The high 21.32, the low 20.90. More on silver towards the end of the show. So traders, first to gold. Nice showing in the precious metals markets, as I said. Really, we have gold leading the way when we look at percentage gains in terms of gold and silver, with silver up 0.52% and gold up 0.68% on the day. Now, we're looking at a 360-minute chart. We've got fib retracements as well as fib extensions that we've been working with. This first one is a fib extension. We're looking at our first wave here, 1, our second wave here, 2, and then our third wave here, 3. When we do that, we get really a band, 161% and 123%. And that's really the range that we have seen this market trade within over the last week, 2 weeks, really, when we consider that the market has genuinely been trading in this range. Now, we are trading above that. If you look at the price right now, you can see that it is absolutely trading just above that point, 27.45. Market's at 28.59. However, it's still trading within the band, but this is the kind of sign that we want to see if we're going to see the market genuinely break above this particular price point. And so traders, as I said, we have fib retracements as well as fib extensions. When we put in the various fib retracements, what you can see is we're still dynamically within this range right in here. And so I'd really like to see it break above, call it 31 to 33. Those are the different points that we have. The key right now is it is trading near the upper end of this range right here. We know that we've had resistance in this area. In fact, our one recommendation that we did have was to get out at a price order, and that was at around 30. So the question is, will we see this market break above this, or will it simply trade back into this range? Because that's what we've been seeing, is really a dynamics of the market trading in this range-bound manner. Now, last time it traded within a range-bound manner, it broke. Now, it broke hard, and it broke to the downside, and that's right in here. So typically, when the market does trade sideways for some time, you will get a fairly dynamic break, and the question is, will it break to the upside or downside? That's something we'll have to see how it unfolds. But the key right now is that we do have nice movement, and that movement is to the upside. So traders, this is yet another way to look at a couple of the fib retracements that we've been working with. This is a daily chart, and the fib retracement that I have is of this long rally, began the end of 2013 to 2014. When we do that, we have our various levels down to a 76. 76 being important because the market genuinely, when it came down to retrace right in here, it genuinely broke through the 61%, but our line in the sand, if you recall, was anywhere between 12.30 and 12.32. It was based upon this fib retracement right in here. It absolutely held. Market began to trade higher and break through various levels. This is the level that we saw it stall at, and this is where we've been really pegging our real support at 1311, 1300 behind that, but 1311 being pretty critical. Now, on this particular chart, we have a much higher level of resistance. Now, the real resistance, I feel, comes from not so much, or including the fib retracement, is this top here. This top here being roughly at 31. So we need to, on a closing basis, take this particular price point out. If we can take this particular price point out, my belief is that the next level of resistance that we would really occur would be roughly around 13 42. And then, of course, the mother of all resistance levels right now has got to be at about 1390. And that, of course, is based upon this top right here. The one thing in terms of a bullish side of the fence, so to speak, is that what we're witnessing is, for the first time, this, of course, is Andrews pitchfork. When we look at this Andrews pitchfork, of course, we have our handle. That handle comes off the record high of 1900, and then we have our outer prongs right here at 0 and right here at 100. We saw it fake us out at one point when it broke above it, but only for a brief moment to come right back down. This time we've got a dramatic difference, and the difference is the market has absolutely rallied above that. So what I think is that even if the market trades higher and then begins to retrace, if it retraces at this outer prong as opposed to breaking into that territory, that really, in terms of a long-term perspective on the price of gold, bodes very, very well for the bulls. And to me, that is absolutely significant. Of course, we'll have to see how this market bears out over time. But my sense is right now that we are absolutely seeing something different than we've seen in the past. And what we're seeing that's so different in terms of this one technical study is the fact that we are dramatically above this outer prong. This is the 0 line, of course, and we could even move back into it and have this be a new channel. Now, if that was the case, we would truly be looking at a different market scenario on a technical basis, of course, on a technical basis. So now, when we look at this market, this, of course, being a 2-day Japanese average chart, what we can see when we take a look at this is we did go red ever so slightly as this market came up. Right in here, we saw body size really decrease. We had this one red candle right in here, a doji-like candle, but now we've gone doji-like over the last couple of days, and it has gone back to green. And traders, even on our one-day candle, which is what I've just done, simply converted it, we're well above our moving average. And I'm looking at a shorter term cycle. This is 14 days on our daily chart. It did go red. You can see that right in here, but we are back to green. Very, very small candle, but it could be telling us that we know the market's been trading sideways, but this is what we would see if we were to genuinely see that market turn around in some way back to the upside. So traders, what about silver? Well, as you know, my sense on silver is we're really trapped in this range again. Very, very similar to gold, but a much, much tighter range. You can see that we are up near the mid area of this range as opposed to gold, which is in the upper areas of the range. I do believe that silver will move in unison with gold. I also believe that if we see gold break out of this sideways trading range and above those highs at about 30.31, we will see silver break above it also. In terms of the next real area that I would look for in terms of where silver could go, I'm going to base it upon these series of tops here, not these highs, but the bodies right in here, which call it at around 2150, and that would be the mark that I would look for if in fact we see gold and silver begin to move out of the sideways range and most importantly pop above the most recent highs we have seen. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow on Thursday for another daily update and review. Bye-bye.